We are back with another weekly update for Pure Perspectives. I'm Clark Alexander. I'm sitting down with Gary Pierce. How you doing, Gary?
Doing great. How's it going?
Good, good. Reminder, smash that like button, give us a subscribe, hit that bell. We'd
Mm-hmm.
love to hear from you. We always enjoy your comments. We always get some interesting ones, but there's always some good ones in there too.
Yeah.
So let's talk weekly update, right? The big topic of conversation is the upcoming Fed meeting. What
Yeah.
say you, Gary?
Next week, it looks like it's a cut at this point, 89% chance. The biggest items that are driving that are so far is employment, job market is the biggest thing. The data's still not great because of the shutdown from the government previously last month. So we're still waiting to get updated information. The information that was updated is kind of lagging. It's older data, so it doesn't really have as much of an immediate impact to policy as it would normally have. So I think we're in catch-up mode from that standpoint. Hopefully we'll have more insights for next week. So the 9th and the 10th is the Fed meeting. They'll meet as they always do. This is the last one of the year, and we'll get a lot of hopefully good guidance, maybe some more insights. But I think the jobs is the
Biggest thing.
the biggest thing on that deal. So once we get kind of a better handle on, I mean, you can just see it in the news. Like jobs has to be an issue, right?
Yeah.
Like big companies, Verizon, Amazon, a lot of layoffs,
Major cuts.
and some are saying, some of this is due to AI, people are getting more, companies are getting more efficient, whatever the case may be.
Fourth
Quarter trimming,
cyclical.
trimming the bottom line.
Yep.
But GDP was strong for Q3. So economy seems to be moving along well. I think Q4, all those numbers, it's going to be lighter because of the shutdown.
Yep. And then we always talk about kind of the news of the rate cut kind of leads the actual cut. Is your sense that we're seeing this cut in the rates that we're quoting today?
Yeah, we're probably down a little bit from a week or two ago than we were. I think the 10 years it bounced a little bit yesterday. Let's just go back and look real quick. I think we were 408 ish. Yeah. So it was as high as like 410 yesterday. So it bounced pretty good because Monday started in the low, like kind of 440 range, 401. But, I think we'll hopefully going into next year, we'll see some other factors starting to drive inflation continues to cool or not.
Yep.
Who knows?
Yep.
Again, that goes back to the government getting their numbers and getting all that lined out.
Yeah, and just a reminder, when we talk about rate cuts, we use the example of stock, right? When a company like Apple announces a new iPhone, the stock reacts. It's similar in interest rates, right? Lenders are out there trying to compete for business, so they try and predict where it's going. So they will make adjustments to their rates based on what they think is going to happen. And we get the question of like, well, there was a rate cut and rates went up immediately after the cut. Well, they overestimated what was going to happen, and they're kind of readjusting to meet the what actually took place in the rate cut.
Yeah.
So
we'll likely see I would say we'll likely see a bump over the next week.
Yeah.
Specifically the day of the rate cut. It is almost like clockwork. When the Fed cuts rates, mortgage rates will bounce up.
Yep.
So
that's why that happens, because it doesn't make sense. We talk to customers all the time. They're like, I thought rates went down. They did. It's just it's not an immediate, it's not a switch that moves. It's the market reacting to the news and then the actual cut happening and them having to readjust. So, fourth quarter, end of the year, not a huge time of year for a lot of purchase activity, but I would say if you're in the market, it's a good opportunity to get out there and get in front of it before rates do go down and we see more and more buyers in the market. So if you're in a position to buy and you can, I would look now.
Yeah, definitely. I mean, right now is a good time, right? You're planning for 26, whether you're looking to potentially sell or do some type of refinance get your mortgage plan in place and have a game plan in place, kind of know where you're at, so to speak, financially as it relates to your mortgage and be prepared. So we're doing, I've had 2 or 3 conversations this week for folks that are really they're not ready to go like today, but they're thinking about, hey, what do I need to do? Do I need to pay off any debts? Am I good? What would rates look like today if I decided to go live with my search? That sort of thing. And we're happy to do that, help you with your mortgage plan.
Yep. Yes, indeed. All right, Gary, thanks for the update. We will be back next week. Thanks, everybody, for tuning in. We will report back on what happened at the Fed meeting and share any other market insights we have. So have a great week, everybody, and we will touch base soon. Thanks, Gary. See ya.